Well, we've reached the last week of May. Hope you had a great Memorial Day weekend. Well, I have a question for you. Is Austin still a tech mecca? Well, the rumors of Austin's decline have been greatly exaggerated, but there are some articles that came out over the last week that kind of told two different stories. So I'm going to share those with you. So there was a report that came out last week. Austin's tech scene is losing momentum. But when you dig into the data, what it's going to show you is that really it's just slowing down from a just supersonic rise versus a reversal and decline. So, anyways, this report came out of a San Francisco based venture firm. It said between 2023 and 2024, startup employment declined nearly 5%, and employment at big tech companies slowed down by 1.6%. However, that's just looking at 1 year. The previous year, that same report said that Austin was the fastest growing city for tech talent. This is just the year before. So, really, if you think about it, if we're going that fast and now we're going that fast, that's essentially what the report is saying. I thought there was a really good quote here by Tom Singer. He's a well-known connector here in town. And he basically said in the 1980s, Austin was a semiconductor town. In the 1990s, we were a software city. But he said now we have those industries, plus we have med tech, space tech, deep tech, neurotech, gaming, fintech, AI, big data, prop tech, real estate tech, quantum computing, robotics, etc. In other words, Austin has greatly expanded into all of these avenues. But this was just one article, basically trying to say Austin was slowing down, maybe not the tech scene it used to be. But if we flip to another article that came out, another report that came out just a few days later, it said Austin is the number one innovation hub in the South. And again, that top ranking follows another report that shows their tech scene was losing steam. But we were just ranked number one in the South in the U.S. We were followed by Raleigh, North Carolina, and Irving, which is part of the Dallas area. And there were 75 different cities that were analyzed. And it says our patents, which were over 82,000 patents that were filed, made us head and shoulders above Houston, Miami, Washington, D.C. We're number 3 overall in STEM employment. So Austin's doing fine. The tech scene is growing. No, we're probably never going to eclipse Silicon Valley in California. And no, we're not going to go back to the Stone Age either. So Austin's going to continue to be a very strong U.S. hub for tech. Here's one of the reasons why. This came out also last week. So Tesla is on track to start using Austin as the first market to test its robo-taxis. Now, if you live in Austin and you are near the city core, the number one robo-taxi in town is Waymo. You see these things everywhere. It actually became trivia for my kids over the weekend. How many Waymos could we see driving around that didn't have a driver sitting in the driver's seat? All of them. So it's wild. They're all over town. And so Tesla is now coming in to compete with that. So basically, Austin is kind of ground zero for these driverless taxis. We're going to see them all over the place. And of course, we'll be the first to find out if we're all going to get killed by them. So pay attention to that. I'll update you if that starts to happen in the market. All right, let's get to some real estate stories. So this is the metro right now. This is where we are on months of inventory. We are really starting to tilt as a total metro into a buyer's market. If you look at supply, I'm going to scroll down here just a little bit. Supply is way above last year, and we're significantly above that kind of 10-year average. And again, this is April data. We'd average about 8,000 homes on the market, but really, if you look back at 2017 through 2023, we really were in the sevens on average. But really, last year we had about 11,000 homes for sale. This last April, we had almost 14,000 homes for sale. And I'll show you that's even higher here in a minute on the data. If I look on the right side, which is demand, and again, the gray bars are your 10-year average. We're a little below average. We're kind of neck and neck with last year in terms of buyer demand, but it's a little softer than average. And yet we have way more supply of homes. And that is really our number one challenge. If you're a seller right now, is we're tilting this 5.8 months of inventory basically means you have almost 6 sellers for every 1 buyer who's going to write a contract this month. So a lot of competition to try to get attention of the buyers. This is an interesting chart. This one is the number of unsold but completed homes for sale. Think new builds. So they're building homes. How many haven't yet sold? So obviously, if you go all the way back to 1999 on the left side of the chart, and then the Bush administration came in and said, "Hey, we really want to make it, a focal point of people to have the American dream, buy houses. Lending was easy." And then we had a skyrocketing of homes get built. But then, of course, we had the great financial crisis. That's the big bubble there, where all of a sudden the mortgage rules changed and we realized we blew up the market with bad mortgages. And now all of a sudden the builders were underwater with way too many homes to sale and not as many buyers. So then they stopped, and you can see a huge drop off through 2013 of new builds. And since, call it 2011, we've really been undersupplied. This is nationally undersupplied nationally on new home construction. Where you're seeing it the most is going to be in markets like the Midwest and the Northeast, where they're just really not building as much. Whereas if you come south to, again, Florida, Texas, the Carolinas, maybe the desert Southwest, like your Phoenix, your Vegas, and even Denver, those markets are building. And so we are seeing lots of supply there. But as a nation, we're undersupplied. Well, of course, we stayed undersupplied. You had a huge rush of buyers buying homes when interest rates were really low in that kind of 2020 to 2022 window. And then, of course, rates went up and boom, now we're seeing that those new builds build up. So remember, these are active on the market, new builds. So interesting to see that. We're right about tipping uh, uh, where we were in 2009. And again, I don't think these are related, but it's going to be interesting. We will see new builds go above kind of that average of where we were pre 2009. All right, this is active versus sold listings. This is in the market up to date. So again, I share this with you almost every week, but if I go back to last year, we peaked out in July, and we're right now in May, but we peaked out last year about 13,700 homes for sale. That was right at the peak of the summer, and then typically we start to see listings drop off. We are right now sitting at 14,800, so we're well above last year. And we still got 2 months to go to get to that end of July number. So I think we're going to be over 15,000 homes by the time we get there. One of the reasons why is look at the blue bars on the bottom. They're not really going up. And so this year, the most sales we had of single family homes was about 2,650 in March, but we get to April and it went down. We went down about 2,550, 2,570 in April. In April, of course, rates have been very volatile, but also we've had the whole tariffs and the uncertainty, and it's just really, cooled off that buyer market and not giving them that motivation to want to get out and buy a house right now. So we're seeing inventory to continue to climb, each month. Here's 11.1. Then we jumped to 12.4. That's 1,300 extra homes. Then 14. Now we're going up another 1,600 homes. Then you go from there to 14.8. So, another 800 homes. So lots more homes are coming on the market than we have buyers coming on the market. And it's just a game of musical chairs. You just have a lot more seller chairs than you have people playing musical chairs right now. If I go over to historical sales price trend, well, it's not terrible. And again, what happens every single spring and every single year? The median home price tends to go up a little bit. And we're seeing that again. If we go back to December, this is the little blip in December. Typically, you'll see the price drop off because those are December sales. There's not as many December sales. Typically, you might get a few more discounts in December. And so they close in January, and that usually starts our year kind of at a low point, either January or February. But then it climbs, and now we're up sitting around 453 for a median home value. If I go back to February, 420, January was 405. So, we're seeing that climb. The question is what's going to happen on the other side of the calendar. We're going to have to wait and see if there's any drop off on that median home price. Here's something that is also putting some headwinds against the buyers is going to be interest rates. We're back up above 7% on the 30-year fixed rate mortgage. And so, the bond market has really been pushing back, I think, around things that have not only happened in Washington. It's kind of a complicated story, but if you believe inflation is going to stay higher, you may want a higher return on bonds. If you believe money is fleeing, or rebalancing maybe out of the US a little bit, maybe going to Europe or going to Asia, then that means there's that many fewer buyers maybe in our bond market, which means the buyers that remain want a higher return to keep buying the bonds. You've got a lot of moving parts there, but essentially the bond market is continuing to climb a little bit. And when the 30-year and 10-year bonds go higher, well, that's what impacts mortgage rates. So we've seen mortgage rates really climb. I'll finish on this chart right here, all the way down here. Wish I could get it higher. But anyways, this is the 30-year fixed rate mortgage from the start of the year. Well, at the start of the year, we were right where we are right now. We were at, right at or above 7%, kind of peaked at 7.13%. And then they started coming down. We had, beginning of a new administration. You also have just kind of that beginning of the year optimism. Rates came down to about 6.75. Right before the tariff announcements, they were coming down even further. We maybe thought the Fed might start cutting a little sooner. And so rates had come down into like the 6.6 mark, and then tariffs got announced. Bam, they rocket right over 7% again. And they've been very volatile up and down since then, but really we're kind of back where we were back in January. So rates since March have been coming up. And again, that just starts to cool off the market. So if you are a seller right now, the good news is home values have held up okay. Really, it comes down to competition. Things are going to take a little longer to sell. And some houses, honestly, are not going to sell unless they do what it takes to get to the right price, to be patient, to negotiate with those buyers and get yourself under contract. So we're seeing some good stuff still sell in a few weeks or even a month fairly fast. And then we're seeing lots of other stuff. I expect we're going to see a big wave of withdrawns and expireds as we move into the second half of the summer, just because there's just not enough buyers to buy all the homes that are out there. If you are a buyer right now, we're at peak inventory. So if you're looking to get into a specific neighborhood, you really want to target an area. The next couple months is when you're going to get the most opportunities in those neighborhoods before, again, we're either going to see some of these properties sell, number one. Number two, there's just not as many sellers that are going to bring new inventory to market in the second half of the year. And of course, you might have some withdrawns and expireds that just step back and say, hey, I'm going to wait till next year, or, revisit my plan in terms of selling this property. So just expect that. But right now we're still seeing inventory build up. I expect we'll see that through July. And then rates are really the unknown story. We'll see where those land. So anyways, I hope this video was helpful. Make sure to watch us each and every week. You can click the subscribe button on our YouTube channel at Ryan Kelly Group. We would love for you to follow us each and every week. And of course, if you know somebody looking to buy, sell, invest, or finance here in Austin, we'd love the opportunity to visit with you. Well, it is officially summertime for my kids by this weekend. I hope it's summertime for you too. Make some fun travel plans, and we'll bring you another update next Monday. Thanks.